They have cashed out and we got nothing. Today, this is the core theme of our video, and we'll talk about what is happening because people are losing hundreds of thousands of dollars before anybody is even declaring real estate crash or a recession in Canada today. So what I would like to talk to you about today is reverse mortgages. And there seems to be a little bit of a conflict between parents cashing out and kids feeling they will not inherit anything because most people are relying on this particular equity and the wealth that is actually being transferred from the parents. However, this used to be the case in the past. Today, the game has completely changed. But what actually changed, and if we can summarize it, is that people are losing equity and they're losing the ability since their pension plan is not enough to survive. So they have to do something in order to survive, and a house is becoming their bank most of the time. So we'll get into the video and we'll talk about the mortgages and what is actually happening. So people are running out of money. They're not selling, they're not moving, they're staying and finding ways to keep going. And this is obviously a danger because if we have no movement, we have a stale pond. It's not a river that's flowing. And we all know a stale water becomes a pond and it starts to smell. And this is exactly what's going on. No transactions means no money for nobody. All right. So what is a reverse mortgage? A reverse mortgage lets homeowners usually over 55 dip into their equity, I would say, right? So their home becomes a personal bank. And a lot of people had these questions. How does it work? And what do they have to do? So is it a lump sum? Can they do it monthly? And I'm sure there are different plans and different ways. But from my understanding is that people will get an allowance from their equity in the house, and then they're able to take a portion or a monthly settlement or a payment every single month, adding it to their current pension or to their plan or how much money they need. So the requirements has to be 55 plus, based on the youngest, if a couple is involved, usually is, has to be a primary residence, enough equity in the place, mortgage mostly paid down, right? In some plans, they want people to have the mortgage fully paid off. And we'll get into the portion where kids are being involved in these discussions. And I was attending a seminar and most people dealing with these said, hey, look, the biggest problem that we have is kids being involved, and we'll get to that in a second. So how much can they take out? So from 55 to 65, 20 to 35% of their equity in their home, 65 to 75, 30 to 45% of their equity, 75 plus, it's 40 to 55. So the older you are, the more you can access when it comes to this type of plan. So how is the money used? They don't just take everything at once, they take it slowly. So let's say they have been approved for $300,000, as mentioned before, it's a lump sum approval, but they will get, let's say, installments or 1,500 to 2,000 or 2,000 to 3,000, whatever the bank and the management and the entire reverse mortgage plan kind of calculates it to be. Now, kids usually get involved and they said, hold on a second, what is going to be left? Because if you are taking everything into consideration, ladies and gentlemen, lately, young people are expecting that generational wealth. They want it, right? Why? Because it will take them a decade, 2 decades, 3 decades just to save for a down payment. So the young generation is squeezed. There's no savings. They don't have the ability to get into anything, I would say, that's normally structured rather than have a huge burden on their head and their back and everything else, right? Some kids even questioning having kids. Like, this is horrible, right? So now the other expectation is like, okay, I will wait and I will let my parents pass away, and then I'll inherit everything else, and then I can move forward. So the entire market, I'm not going to say entire, but majority of the market, even if you speak to people in the industry and experts, say Toronto GTA has a lot of wealth and that will be transferred. But the handbrake is that those people that currently live in these corner unit homes, big mansions, small mansions, a house, you call it whatever you want to call it, they don't have another choice but to dip into the equity. Now, on the seminar, there was a question, and somebody raised a hand and they said, hey, look, can we stop the payment? And yes, absolutely, you can stop the payment. However, whatever was taken out, obviously with interest and everything else, it becomes kind of like a personal line of credit gig, right? So it has to be paid off. Now, other people questioned what happens if I'm elderly and I don't have to, I cannot pay these payments. Well, that's not how it works. So it's, let's say, $300,000 approval, you get your monthly payment, and then, let's say they pass away or something happens, that particular mortgage is kind of added as a lien on the house. So when the house is sold, then obviously the bank will be paid out first, and then whatever it's left to the kids or whatever. So some people are claiming, hey, look, it's a 50-50 situation here, because kids will get, let's say, 30% of the wealth, or 60%, or 40%, or 70%, and it might be actually fine if you really deeply think about it, because the elderly folks have something to ride the rest of the years and they can survive. However, the kids already have an imaginary number that they rely on, and that's how they're spending. So it seems like that the entire generation is spending the money that they don't have, but they do have the expectation. So I hope you gain some value out of this. Please speak to a professional that can actually explain what a reverse mortgage is. But this is just to open your eyes in a different direction and give you another option. So I hope you gain some value out of this video. Please like, share, and subscribe, and I'll see you in the next one.